All right, and we are live. What's up, everyone? Be your own bankers, bankers only club, infinite banking concept, private money clubbers, whoever, however you're here. We're happy you're here. It's Wednesday. It's hump day. Hopefully everyone's having a great week. A lot of our team are just coming back from the Money Multiplier Mastermind out there in Denver, Colorado. I know it was an awesome time. Got a lot going on right now, like always. So we're here to answer all your questions. Government shut down, but we're open. So we'll get these questions answered. We'll have some fun here today, and we'll be right back in about 14 seconds to do Around the Horn and get to it. All right, so what's up, everyone? My name's Stephen Nagy. I'll be helping host the show today for the first half, along with Miss Shauna Decker and Brian Fouts. We got the whole team here ready to answer your questions. Let's see, fun fact. I just got some new silver in. You guys know I like to buy silver. So I just got 4 of these rings in. There's pure silver. But I don't know if you can see them or not, but they are... you're not going to be able to see it. I'm not going to post a picture, but these rings are appropriate for the first show we do every Wednesday called What the F Happened, because these are F rings. So it says F-U-C-K right across there, and you can spin the little dial depending on the type of mood I'm in. So it says F off, F me, F it, F everything, or F you, depending on the type of mood I'm in. And yes, Chris Noggle, I would be mailing you one of my new F rings. I got a whole stack of them to give out. So pure silver, super cool. That's my story for the day. I'll pass it over to Brown.
That doesn't make you guys F buddies then, F ring buddies, does it?
Yes, it does.
Okay, I'm just checking. Just checking.
Well, you can see the nice cases they come in, so they're very appropriately logoed.
That's awesome.
So it's basically like the 8 ball, right? The 8 ball, but it's just F everything. I like it.
Whatever you
new
want.
version.
There we go.
You can choose, though. You can choose. Hey, everybody, Brian Fouts up in Northern Idaho. Hunting season is officially open for the next month and a half, so we get a long hunting season up here, so excited for that. Recovering from getting a virus infection while at the mastermind. Didn't really get to attend all of it, unfortunately. Still not quite all the way recovered, which is kind of crazy. So definitely health is wealth is definitely on my mind right now, because that caught me by surprise. So I'm still kind of recovering from that whole thing right there. But trying to think anything interesting is going on right now. Just getting ready for winter. So I'll pass it over to Shauna.
Yeah. You just reminded me of one of those memes where it's like, if you're looking for that sign, like where you're not sick and you just want to be like, yes, because whenever you're sick, you're just like, God, I just want to feel better, feel normal. And it's like, this is your sign that if you're feeling normal right now, like celebrate that.
Yeah.
I hate getting sick. I am like, no, I am going to make the little dig at you guys, that you men specifically who get your man flu. I also am exactly like that, though. I am like dying whenever I'm sick. But not sick so far, knock on wood, and happy to be here and read questions, and I'll pass it down to Chris.
Where are you going tomorrow, Shauna?
I'm going on a trip
Where are you going?
to Las Vegas.
Oh, no.
Oh, wow.
The story gets good, though. So we just had an hour-long meeting with a body language, nonverbal communication expert.
I did. I learned all the tells.
Teaching Shauna how to play poker. So she's going to come back a millionaire. So everybody wish her luck.
Yeah.
When I heard the trip, the first thing I was going to ask, how's it funded?
Oh, there you go. I did the little girl math thing where this trip has been a year long in the plan. So it's basically free because I paid for it last year, right? So that's that girl math.
Very cool. Well, just back from Denver. Was out there with Fouts, and yeah, Tess was there, Linus was there, Jason was not. But it was a good time, really good time. A lot of good people. It's amazing how fast 2.5 days goes. It's just like you don't have 2 seconds just to even stop and breathe. In the morning, I was coming down, like sneaking down to get a coffee or go to the gym. I can't remember what I was doing. And I saw Tess, and it's just like, that's like your only quiet time is in the morning when you're like sneaking around, like, I don't see anybody, and you're just trying to get to where you're trying to go.
But Tessa's like, I have an idea.
Yeah. She's like, boom. I'm like, damn. And I'm just messing with you. Her idea is awesome. She just sent it over. But yeah, no, just been a crazy couple days back in the seat. I don't even remember. I think what was that Sunday? Took a red eye home. Just haven't been the same since. Plus, been fasting for 40 some hours. That's interesting. It's fun. And here we go. Let's get into some of these questions after we go around the block. Tess, you can tell everybody what it was you showed me in the hall. Was that morning or evening?
It was the eve. I think it was. I don't know.
Exactly. We don't even know.
Not yet, but I'm going to send it out to somebody tonight, I believe.
Okay, good.
All right. I will first test you like I've been in the insurance industry 30 years, life insurance a couple of years, because this stuff is freaking amazing. And if you haven't gotten into it, get into it. I'll apologize. I have a female cat back there, so you'll probably meet her soon. And Stephen, you know you're effing. The only thing acceptable when it comes to me is effing amazing. Okay. And now over to Linus.
Hey everyone, Linus Nolt here from Hopkinsville, Kentucky. Definitely identify with everything Chris is saying over there with not having been the same since. We were gone for an entire week. I took my entire family out to Denver, and then we made the entire drive back Sunday, 15 and a half hours, start to finish. It's a lot of work, a lot of planning, it gets a little rough with 4 kids, but we did great. We stopped an hour for dinner even inside that 15 and a half hours, so it went pretty good. But just like Chris said, haven't been the same since. It felt like an entire week of Mondays since. A lot of stuff to catch up with, but I'm excited. Got a lot of people to help. I'm happy to have met some of you team members and attendees here in Denver, and help some of you. And we'll be connecting with more of you to help more of you answer any questions and be of service. What's going on, Jason?
Wow, 15 and a half hours, brother, with 4 little girls and a wife. Whew, God bless you. That's amazing, man. So grateful to be here. Like Steven knows, I'm in the City Beautiful. Always here in Orlando, his favorite place in all of Florida to be at. And just grateful for today. Most days when you have another year, another circle around the globe, you think, hey, what is that special thing? How are we going to celebrate? What are we going to do? And today I've done everything like I would regularly do, but just in a much different way, in a much more present, joyful, happy way. And it feels pretty cool because usually you're let down on your birthdays thinking, what is going to be the big thing that makes it so special? You get a little wisdom once you get past 50 though. So grateful to be here. Over to Miss, when you popped on the screen, Bree, I thought, who's this rapper? LL Cool J in the house. Over to Bree Shaw.
I was having some technical difficulties. It was saying my camera was hooked up, but there was no image. I'm like, what? What do I have to do? So I started troubleshooting, but I'm glad I made it in.
Good to have you here, Bree. It's been a little
Nice
while.
to have you back.
It has been a bit. We've had a lot of stuff going on as the team, with me and Joe. Excited for the website that we're getting built out here by November 4th is the deadline for that project. So, thank you, Anna. But happy to be back. My birthday is going to be Friday, so I still might be willing to answer some calls if anybody needs us for anything. But happy to be around. Looking forward to the questions you guys have. And over to Joe.
I was going to say, we rounded out the Brady bunch. Here he is.
Well, go figure. I had computer problems. I couldn't get the stupid thing on. But here I am.
It's been a day for that, hasn't it?
Oh, it certainly has. Went through Google something?
Google Meet.
Google Meet. That was messed up. I clicked the wrong button. Then we had to go to Zoom and
Whole hour.
questions in, guys, because we want to answer your questions.
Yes. And it's Jason Sipple's birthday. Happy birthday.
Happy birthday.
Birthday.
Time for the birthday.
Oh, I just got a brookie bar. Thank you all from the farm. That's a brownie and a cookie, if you're wondering.
I was wondering. I was going to pretend I knew what you meant for a second. Now I do. All right. PB719 is saying, comparing to a HELOC, I will transfer from my personal line of credit to build a savings with Velocity Banking. Can my bank take away my personal line of credit if they see me using it to build a large savings account? And then he kind of added on some more. This is how I will feed my policies, especially with a large dump in. I have my Velocity banking process written down and ready to start my progress very soon. But will the bank take away my personal line of credit if they see me using it to build a large savings account?
Why are we using it to build a savings account instead of it going into the policy?
I think he might have just used the wrong terminology there.
I
and
think
is
he
actually
might be
referring
doing
to
that because
putting
he's
it
saying
in here.
this is how I will feed my policies.
Right.
So I think he is using the personal line of credit to feed the policies, but then maybe treating the policies like a savings account.
I mean,
Well,
we aren't the banks, mind
Yeah.
you, but typically what we've seen and heard is that the times when banks will really do anything to impact the credit line is if you're not making the payments, your credit score drops drastically, or if you're not using it. So if you are using it at least every year and funding it that way, but especially if you're doing Joe's one pot system, you are going to be drawing from it every single month, but you're also going to be contributing to it every month. So Joe's personal experience was not having it happen. And then from our clients' experiences, they haven't had it happen either, as long as you're doing the one pot system.
Everything in motion, you should be okay.
All right. Jason Stanley is saying my mortgage is 11 years old, so I paid the worst of the interest. Should I stay in?
What's your interest rate? I'd have to see an amortization schedule. I'd want to see an amortization schedule to answer that one.
I think what he's also insinuating is that he's probably paid the highest paying interest years so far. And maybe
the highest loaded years in 11 years. But you're still not out of the thick and thin of it. I mean, depending on what your amortization schedule shows, 11 years of a 30-year mortgage, if it's a 20-year, then I'd probably just ride it out. But if it's a 30-year, you still got a lot more like front-loaded interest to go from every mortgage I've ever seen.
But don't we have a tool for that? There's a tool, I think, that
it's
created. And
it's just a mathematical calculation, as to whether or not you could easily figure it out.
What's the alternative, though? Like when he says, should I stay in? Well, what's your other option you have? Because you're obviously comparing.
Could you pay it off?
Yeah. What are you comparing it against? Like, so you're saying, should you stay in? But what's the option you have beyond staying in? Like, that's my other question is, well, most people don't have another option in a lot of cases.
The basis on the question, regardless of what the interest rate is, it's about the cash flow. So if $10,000 a month is coming in and $5,000 is going out and there's $5,000 extra, that $5,000 extra would be going to the principal if it was in a HELOC. Right now it's in a mortgage and you're not going to put that extra $5,000 to the principal because you don't have control of it. So if it were into a HELOC, you would be paying that much more, that much sooner, and that, that's kind of where I'm looking at it.
My parents have had their HELOC or their mortgage for some time. They're out of the highest hitting interest. The reason that they're looking at and considering a HELOC is because their goal has shifted from paying off their house and just having it as a liability that you still have to pay your taxes and maintenance and utilities on, and trying to find a way to increase their cash flow and build up their passive income so that they can feel more protected and safe during retirement. So they want to access that equity from a HELOC. So they're able to put that money in motion, of course, capturing it through a policy and preserving it before they put it into any type of opportunity. But that's where it depends. Are you trying to pay it off quicker? And HELOCs typically are faster than mortgages, but same old answer. It depends.
Yeah.
I'll run the numbers. Give me a call.
Yeah.
A little shout out here. Shane is saying, great mastermind, many aha moments from the event. My wife is now asking where her money is invested and how many more policies we can get. Fully engaged.
That has to be one of the biggest wins for anyone. Like any spouse that's practicing, if their other side half isn't all the way in. Shane, wow, man, I'm excited. I know Patty popped it in the chat too. I actually just grabbed that. I was about to text you, so I'm just going to say it right here to you. That's amazing. Congratulations. That's huge.
And he had his 3 daughters there too.
Yeah.
Mason,
the whole fam was there. That was the coolest part about it.
That is awesome.
Get them involved. Get them involved. Have those money conversations. Get them involved. Let them know what's happening, right? That's how we change future generations.
100%.
He put it in. Good. I was just talking to Jason or Justin yesterday.
Okay, so Justin, do you want me to keep reading it?
Oh yeah.
Okay, so Justin saying, with Lafayette Life, I wanted to pay my loan interest with ACH, but on the website, you can only do that with the premium and loan repay. I'm wondering if I can put in loan repay for that amount I owe, since technically if I didn't pay the loan interest, it would go into the loan anyways. But if I pay before it's due, I wonder if my policy will still have the dividend rewarded.
Yeah, exactly.
Okay.
Is that how it works? Because I didn't.
Yeah, it's exactly how it works. It depends on the carrier. I mean, he's talking, direct
Lafayette
versus non-direct, but Lafayette, yeah, you're non-direct, so you're not affecting your dividend at all, even with the loan out. But that's exactly the way we would always tell people to do it. Is because you can't pay the loan interest but one time per year. I mean, that's just how the insurance carriers are. But you could take that of which your loan interest would be, and you know what a lot of people do though. Like, let's say you're just paying loan interest payments back to your policy, which I do this all the time. I just pay them back as a principal loan repayment, because then at the end of the year, if I was just paying just the interest, I just don't pay when I get the premium invoice or the loan interest invoice, I just don't pay it. And then it'll just roll in as a loan, but you already paid the loan down. So every time you're paying the loan down, you're saving yourself interest. That's what the vault shows so eloquently. It shows the economic value of paying loans down in the policy. So, whether you're paying principal or you're paying just interest, it's all the same. Just put it right in as a loan repayment. And then if it's supposed to be just for the interest, just let the loan interest add on at the end of the year. Is that what you told him, Joe?
No, Shane, because you have to pay Lafayette the interest with a check. You have to send it in. We're trying to figure out the way.
If you don't pay the loan interest with a check, it just rolls into the loan, right, Linus?
Yeah, it's the same thing. I would actually recommend paying it into the loan instead of just the interest by itself. If you're planning to pay it, a few days early or something, because I've even experienced that. I was back and forth with policy services to figure out exactly how this is working.
Yeah.
If you're making that loan repayment online, say you owe $1,000 in policy loan interest, you make that payment online a few days early, a couple weeks early when you get the notice. You've reduced that the loan balance now. So the actual interest that's charged at the end of the year and applied to the loan balance is actually going to be a little less than $1,000, just because we reduce the balance.
So I don't have to write a check and can just go in, throw that $1,000 in a couple of days early, and then when they drop the interest in, it'll be $9.95 then.
Mm-hmm.
Oh,
A couple bucks less. You save $1 or $2.
Yep.
Cool.
Isn't that who says that? Geico, or is that Allstate? Save $1 or $2.
No, it's your thing about picking up pennies.
I definitely am a penny picker upper.
Only on heads.
Oh, yeah.
My wife gave away my bottle. We keep all of our bottles out in the garage, and I take them back. Like it's just my cash. I have no cash. I don't get paid in cash for anything. And my wife gave it away. She's like, well, they were building, because I was traveling. They were all building up, and she gave them, I think, to her dad. And I'm like, where'd my bottles go? She's like, what do you mean? I'm like, the bottles, my only cash source. And she's like, I gave them to my dad. They were all piling up and in the way. I'm like, oh no.
His lucky day. One man's trash is another man's treasure.
$7.35 is gone forever.
She's like, why don't you just go to the bank? I'm like, because I got pissed off one day and cut up my debit card, so I can't go to the bank. I really don't like banks. I'm not kidding. Like I don't just say it. I practice what I preach. I avoid the bank like the plague. I hate the bank.
All right. Well, here's the question, and this is
their bank. Chris avoids their bank. Sorry, Sean. I'm just their bank, not his bank. He loves his bank. He loves our banks. He doesn't like their bank.
Infinite bank.
That's right. All right. Million Mushroom Artist is saying, do you like XRP?
Blank faces.
Is that a snowboard? What is that?
It's a
I'm
cryptocurrency.
kidding.
I don't think any of us really here do crypto. So
No, I can speak to XRP. The use case of XRP is actually really, really good. Probably one of the best. So I would highly recommend. Like, if you're looking to invest in crypto, that'd be the one to invest in right there.
what's
I
use
know
case
all the
for it?
rave is on, or all the everybody's talking Bitcoin. Well, until Friday, right? Isn't it funny how everybody's like an expert in Bitcoin and crypto, and then all of a sudden one day it gets slaughtered, and everybody's like, oh, everybody's like. Isn't that funny, Stephen? How many years have we been going through this with Bitcoin, right? Everybody's an expert in Bitcoin when it's making money, but when it's losing, everybody's just like, oh, what happened? Someone shorted it, man. They got some inside info and they shorted it. That's what happened. But XRP is a good use case, man. I think long term you're going to be really happy if you invest their dollar cost. I would suggest dollar cost averaging into it because I think it's a bit high. But I said that about Bitcoin when it was 40,000. I said it was high. Whoops.
I just recommend Labubu's. You guys can have your Bitcoins.
I used to be quite researched in crypto here up until 3 years ago or so, maybe a little less than 3 years. So about 4 years ago, I should say. And XRP was the one I wanted to stay away from. Sure, they had a great use case, but their tokenomics were very poor. They can inflate the supply. Was the big negative that I saw at the time. I don't know what has changed, what all has changed in tokenomics and management with XRP since then. But yeah, the negatives I saw was that they could inflate the supply and that it was not decentralized. So that was a concern. But yeah, I don't know what's happened in the last 3 to 4 years there.
Saying XRP/Ripple is intended to be a decentralized platform for the international banking and money transfer.
Yeah, it really does tie very nicely, and that's why I said use case to the Genius Act. I still think it's one of the best use cases in crypto right now. Just my opinion.
All right, and then we
I'll say this: if you're looking real fast, if you're looking to if you're looking for alternatives, you're looking for places to move money and invest. We're going to all be in Orlando in just a few weeks, November 7th and 8th. So we have the Private Money Club Money Tank event coming up. I know we've been talking about it now for the last month or so, but if anybody hasn't got their ticket yet, definitely check it out. It's privatemoneyclub.com/money tank, but really great place to meet new people, partners, investors, borrowers, lenders, regardless of which side of the coin that you're on. But all day Friday, all day Saturday, we do things in the evenings. If you go VIP, there's a Thursday evening VIP mixer that we're doing. And I just heard today Sean is putting on something extra for the VIP people, which I don't know about, but sounds good. And then if you absolutely can't make it, we did open up virtual as well. So you can watch the live stream as it's happening. And then you can watch the recordings afterwards as well. So if you go in person, we do give you the recordings also. So if you miss anything or want to go back and check out a part, we do give you those recordings with the live ticket as well. So recommend being there in person. Orlando's a really fun place. Nice weather this time of year. We're going to be right on Universal Studio property. So highly recommend checking that out and grabbing a ticket. Is Vivi coming to Orlando? Not this time?
Are you going to Orlando?
Disney World.
Not this time, huh?
Disney World.
No, not this one.
All right, maybe next time. We'll meet you up there.
Like 2 weeks, 3 weeks, November 7th.
All right, cool. Hey, Fouch, you up to answer some questions?
Yeah.
Or I'm sorry, ask some questions?
Oh, yeah. Sure. See what we got going on next. We already did this one. So we already go through this one, the Lafayette one of the interest.
Yeah.
Oh, she didn't mark them off. Shauna, dang it.
I think we're
up.
Rob J. Yeah, that one.
Yeah. So Rob says here, I just took a policy loan from Security Mutual yesterday for $10K. Immediately, it showed that my payoff was $10,014, and today it shows $10,015. Just wondering how they are calculating that payoff.
I believe your policy loan interest is right around 5 to 5.5%. Just for your information, I happen to know your policy, but how they're calculating that on the online portal that it's showing you, I don't know. should be a quick and simple phone call to policy services. They always know, why it shows what, and they can explain that to you. I mean, it looks like, maybe a week's worth of interest.
Yeah, it's just interest. It's calculated daily. I mean, you only pay it one time a year, but it's calculated every day.
Yeah. Right. Let's
So
throw an email off.
Exactly what it is. 1 penny. It's a penny a day.
But why is it showing $14 the very first day?
Or $1? I mean, $1 a day.
I don't know. That's a good question, though.
Probably just the way they calculated. They probably, who knows? I mean, at the end of the year, I can guarantee you it pencils out to be exactly what it's supposed to based on the loan interest rate.
Gotcha.
Yeah, some companies are charging the interest when you take the loan up front. Some are doing it at the other end. So either way, it works out the same way with what you're credited for, especially if you're paying back the loans, right?
Vivi, you got some money to invest. Vivi, you got some money you want to invest? What do you got there? You got a
big
silver
goal
coin?
to keep in mind is going to be, whatever your annual interest rate is, and am I going to pay that back each year, once a year, or am I going to be paying it back quicker than that, and I'll be paying less than interest? That's all there is to it.
Yeah, interesting. Okay, we don't have a lot of other questions, so keep that in mind, guys. Get those questions in there. Dexter's saying, is there a reliable factual place to look or find out which states your policies are exempt from lawsuits and judgments? Yes, there is. I'll put it in the chat box for you real quick. It says third party, but they do list out typically the state-by-state codes in there, so you can kind of hover over every state, and then if you really want to get into it, you should look up the codes or the state numbers. And there's right there in the chat box. It's a good one, the bookmark too, for anybody. It's a good site.
I'm grabbing it right now.
Let's see here. Brian Young says, how long after you pay your bill can you take out another loan from your policy?
I was taking them out every month.
Anytime there's cash value.
Yeah, as soon as there's cash value.
So some companies make you wait like 15 days before you can take that cash value out that you put right back in. So there might be a little bit of a waiting period, depending on the company, but typically once a month is the kind of the rule of thumb, maximum.
Did you put it back over there?
It's here. Okay, and then I think Justin's talking about the PMC events. Are you guys doing it virtual? I can't make it.
Yes. There will be a virtual part of it.
Awesome.
And it's recorded, so you can watch it again.
Yeah, the virtual ticket looks available on the page right now too. So that same landing page, you can get a VIP, general admission, or virtual ticket right now.
Cool. There you go. Sean, you want to put that in the chat box maybe? The link. Random question here or comment. Has anyone picked and consumed wild mushrooms? I hope they find some cancer mushrooms this weekend.
Morals.
Morels is the ones that we find up here a lot, and that season is only in June. But nah, not doing that right now, unless I get a little loopy or end up in the hospital. See, Shane says, love to hear Rashad's way of working through if he stored the property or tear it down and rebuild. Good thing in video. So I'm not sure which one he's referring to. Anybody know which one?
Recent video with Chris.
Okay, I haven't done it then. Cool. Yeah, a lot of new videos coming out, so go and check those out. All right. Keys Poet says, my husband was from Poland, and we used it to go mushroom. Okay, this is another mushroom.
But hey, mushrooms are important to talk about. Like I take cordyceps, which are a mushroom. They're ground up, and I have a pill and I have a powder form that I put in my shake. And there's a lot of medical research on mushrooms, but I do cordyceps.
I've been seeing some of those things where you can buy them and they're like concentrated.
These aren't not the hallucinatory ones. These are
Put that out there.
Yeah, okay. I just want to make sure we weren't talking about the ones that was shrooms. We're talking about mushrooms.
Yeah.
Mushrooms. Yeah, that's funny. Another follow-up question. Brian says, how long does it take them to update your cash value of a policy after you pay your base PUA and loan interest?
Depends on the carrier.
Yeah, and those are all three different things too: base, PUA, and loan interest. It depends on the PUA too. So if it's your premium PUA, it comes in pretty quick after you put it in, real fast. So in my experience, and then if it's like a dump in or like a larger one, I've seen it take up to 10 days sometimes for it to come in. So
the carriers are all pretty much the same in updating that cash value as soon as the payment is actually applied. So within a day or two. But you might be referring to the available loan value.
That's what I was
what you're not going to see for maybe as much as 2 weeks or so, because the ACH payment process with the actual conventional banking system takes so much time.
yeah. Oh, here we go. That's what he's saying.
In
So,
between.
so this is what Shannon's talking about. So he said, Rashad and Chris's latest video was interesting. Curious, what is the entitlement opposed to permitting is, or is there a difference?
Sorry, she's drawing pictures on my lap here. Entitlement opposed to permitting is.
Like, did you get an entitlement to the property or a permit? Or
Permit. Yeah, we're still in the permitting process. I'm not sure. You know, I'm not a developer, so Shane, I'm the wrong one to ask that. Rashad would know more about that. I kind of don't even care. I just, it's all demoed. It's getting grass seeded now. And, you know, it's going to be a nice vacant piece of land. We've got a couple of people interested in buying it, you know, and I think we're going to bring it to permit phase, like to the town to get it permitted for the building that we want. I have a meeting tomorrow with the architects and the engineers to figure out what are next steps to do that. Because once you do that, whether it's entitlement or I know this, whether it's entitlement or it's permitting, both add tremendous value to the property value, because now it's so much less work for the people that buy it to do it. The entitlement part's probably better than it would be to go to permitting. I'm just so far along in the permitting.
Gotcha. All right. So Rob has a follow-up to his SML question. He's saying, I always just pay the full loan amount down to zero. I'm assuming that means I've paid all the interest since they add it in daily.
If your loan is zero, yeah, you don't owe any interest.
Well, what did they say?
What about the time that he used it?
It automatically accounts for it. When that's what I noticed, is that when I was paying my loans back with so little in there, it would say X amount is going to be due on the anniversary, and then I'd pay it back quicker, and it would say on my payment history loan interest reversal on the amount and what amount was actually applied to the interest. So I mean, that's where I'm thinking it's going to depend on the carrier. But one thing that was consistent in the language was always that the loan interest was due based on your loan balance upon that period. So if your loan balance is zero, then they wouldn't have any interest to account for.
Yeah. In my experience, if you're looking to like one day pay your loan off completely, including whatever interest is accrued so far, best bet is to just call the carrier and ask for what the payoff amount is, because the amount that's showing online may not be 100% accurate as far as the actual payoff amount.
Interesting. Is that unique to SML?
No, I've seen that on Lafayette, One America. I'm not that familiar with Security Mutual's payoff, but just based on Rob's earlier question, I would say similar, where the payoff amount shown online might actually include the entire year's interest or a month ahead, or, you know, I would call to get the exact payoff amount to avoid having to go back and forth with having paid too much or not having paid the policy loan interest along with the full principal. So that's my thought.
Okay. All right. Another mushroom question, but not mushroom related. So can anyone explain stable coins, so crypto, of course, why they matter for those who do not understand why they may be more important than expected, and why new government regulations will make this subject important?
It's a digital dollar. It's the easiest way to explain it. There's lots of stable coins, but effective to like what the Genius Act is referring to is creating a dollar-like stable coin that would basically be 1-to-1. So $1 is equal to one stable coin. And what the Genius Act is doing is paving the way for stable coins to be able to be deposited in traditional banks. So like you could literally make deposits in your traditional bank, take withdrawals from your traditional bank, trade, you know, on chain with your stable coins. The big changes now is creating the regulations and the stability in the stablecoin industry by putting it under banking regulation. So, for example, let's just say your policy, you got $10,000 worth of cash value. Let's say you tokenize that $10,000 of cash value into a stable coin. We'll just keep it simple and do it just any stable coin, call it sound coin. And that was worth $1 of cash value backs $1 of that stable coin. Now you've got a digital dollar that can go and you could invest in tokenized securities. You could invest in real estate. Anything that's in the chain you could invest in, and it's just all digital. And actually what's happening now is real world assets like real estate can also be tokenized and brought up into the blockchain. It basically it gets rid of all the riffraff. It gets rid of the mistakes because it literally provides a completely almost, what would be the word? Completely secure, and it's not so much, they say decentralized. I don't know how decentralized it'll be. What's the word I'm looking for, Linus? Like up in the chain, the blockchain basically just, you have a full record of every single transaction and everything. So there can't be mistakes like there is in real world assets. Like there's always mistakes with title. That's why you got to buy title insurance. If a real estate deal was done in the chain, you would never, ever have issues with title because you couldn't, because it would be able to see every transaction that has ever been, put to that property. So it just, I'm not doing a great job, but the ledger, thank you, Brian. There's a ledger of everything with every real world asset that would be put into the chain, and same thing with stable coins. Wow, I just did a terrible job of butchering that.
I'd rather go back to gold coins.
Yeah, it's hard to understand because there's a lot going on with it, but yeah.
I was gonna say, I think you did wonderful.
It's going to get easier and easier. That's all I can say, because it's just going to be no different than you pulling out your debit card and swiping your debit card to buy something. That will soon, I don't know how soon, but soon enough, that little debit card will be associated with your stable coins. And then you'll be buying things with stablecoin, or you'll be buying or trading things or investing. Like Robinhood right now has tokenized securities. Lots of issues there, but there's tokenized securities. So you could literally use stablecoins to invest in specific stocks that Robinhood has tokenized.
Gotcha.
It's really not as complicated as you think. You just got to get your head out of real world assets and holding a dollar, and everything is just digital.
Is it based in like the sound money concept, like Austrian economics?
Correct.
A little bit?
Correct.
Is that,
Yeah.
Okay. It has to be packaged. That's all we're saying.
Like he was saying, like Brian was saying with the ledger, there's no errors anymore because everything is accounted for, if you will. It eliminates human error. Cole Snell explains this so much more fluid than I do. I heard him today explaining it, and I'm just like, oh yeah, that all made sense. But I'll be damned if I can go around and say what he just said.
Probably scaring Joe right now.
Nobody will know the difference when it happens. It'll be exactly what you're doing today. It'll just be done digitally.
Yep. All right, so the next question, Linus, I think this is one we were talking about here a few days ago. So Corey says, I was able to add a lot of paid-up additions in the first year with One America, but I'm curious if that's still able to do in years 2, 3, etc. And moving forward, would it be wise to look for companies that allow for POAs longer down the road as we add policies?
Corey, oh, there he goes. Awesome question, Corey. Yeah, this is, we worked together, and Corey crushed it. Like, he has been one of the most confident, like his confidence everyone saw in Denver has risen and risen and risen, like anyone else who's been practicing for a while, and the certainty. So yes, you can keep adding PUAs to One America years 2 and on. It's 3 times the base is what's on the white paper. So yes, you can keep doing that with all the policies you have in place for yourself, your wife, your kids, all of them. So
now, One America is actually unique in that you can add at least 3 times the base in extra total PUA premiums each year for the entire life of the policy, versus most other carriers are going to be cutting it off at age 75 or something similar.
Yeah, we did that with Corey. Actually is the one, because of his request, Linus, that I actually learned, because I was looking at the other carriers where a lot of times, like you said, they cut the PUAs off at 75, right? Or it shows a mech. And so when Corey asked me, hey, I want to, on my kids, I want to run it all the way out to the end, 121. I was like, okay, let's try it. And I did it. And I'm like, oh, wait, that works. We can do that. So literally, like, you guys pushing us to ask some of the questions and asking these kind of questions, it's always asking us to get better. and to really practice what we're teaching and preaching and doing ourselves. And we're always learning. So like Corey helped push me to something new that I didn't know. So.
And I had a question that came up today on a call, like saying, can I put in more than three times the base on One America policy in like year 3?
I can't tell you yes, but I was actually going to add this for Corey as well, is just do a request to policy services and go with whatever they're telling you works without mecking. I've seen that sometimes be more than 3 times base. The white paper, like Jason said, says 3 times the base. So I can't tell you more than that. But if you go get a quote from policy services, find out how much extra you can add, and go with whatever they tell you, because they're the ones, doing the back end calculations. They know what's up.
But on top of that, Linus would add, because he's done this himself, you can ask that question again the following month. Because again, the way I understand this and the way I usually show it when I'm educating someone is you have your cash value and then you have your death benefit. And there's a line between them. And that distance is what measures what the IRS considers the modified endowment contract, where it goes from being life insurance to being an investment. And so as both grow, your cash value and your death benefit, they slide up the scale and grow daily. So that means that the MEC line, and maybe how much PUAs you can add are changing somehow mathematically. So that's why you got to go and ask every month, because you might put the maximum in 1 month and then that changes and you ask the next month, like Linus has, and you can put more in. You're like, I'm at my MEC. Oh, wait, I got more. So don't be afraid to ask, because the answer is always no if you don't ask. So.
Right.
Yes, you are on mute. Unless I'm just not hearing you.
She's muted.
Okay. Still muted. For anyone who's never had a brookie, I highly suggest them. Go get one.
Linus and I have a client who's doing the PUA every month. It's a very sweet thing.
Yeah. Cool. All right. Shane's asking, what's the SM or Security Mutual's flexible or blended policy called? Basically, where you can add larger amounts of funds over time for longer. So,
I think he's referring to the combo rider.
Yeah.
We had discussed that. I may have explained it a little bit inaccurately to you, because you're saying over longer periods of time, because that might not quite be accurate. But as far as room for large dump-ins further down the road, yeah.
Very cool. Yeah, it's kind of very, only a couple of companies, a handful of companies can do that, where you can add in like the dump-in, we call it, more than year 1. And SML is one of them, by the way. So, all right, a bunch of comments here about mud and coffee. So Rob says, on my Lafayette policy, I've noticed that when I take out a loan, or when I make a loan payment, my loan balance decreases right away, but my available loan amount takes a full 10 business days to increase. So that's in response to some of the previous questions that were being asked. But yeah, so essentially, it's 10 days, and then it goes back up. So for them, 10 days.
Lafayette said that was their bank verification waiting period. And the only way to gain access to the funds quicker is a statement or something like a bank statement from your bank showing that the funds were actually taken from the bank account and received by Lafayette on the bank's end. And if you're like me, your bank only does statements once a month, which means it won't matter. And you're going to have to wait 10 days.
Yeah, thanks, Bree. And for everyone thinking about this from the life insurance perspective, why there is a little bit of lag time is they want to make sure the money actually makes it back to their account versus someone being able to double dip. One America, I talked to policy services with them probably 2 years ago, and they told me, hey, it's about 10 days when you pay back the loan before that cash value is available for you to take a loan out again. And it varies carrier to carrier, but the reason, again, they want to make sure that money came back and someone is not double dipping or double taking loans of money that's not really available.
Yeah.
I like that you said that, Jason.
Yeah. So Corey had this question before about the PUAs, and then the follow-up one comment was, where'd it go?
Yeah, he wrote, they just keep saying yes.
Yes.
Found the ceiling yet.
Here's a fun fact about Corey, y'all. So Linus, myself, we may or may not have ended up in a quote unquote principal's office because of Corey's ability to add so much additional death benefit to his ledger. Because every time you put an additional PUA in, it's going to do three things, three positive things. It's the same thing when if you have your dividend by PUA, it's going to buy more death benefit first, and then it's going to increase your cash value, and it's going to give you a significant portion. Did I freeze?
Nope,
No,
you're there.
you're good.
Okay, significant portion of the cash, like usually over 90%, and it's going to increase the likelihood that you'll get a better dividend. And so Corey, put all of that from the life insurance perspective, put all of this additional death benefit on the books that wasn't underwritten, and he has supercharged his policy. I pulled up his enforced policy and I threw it into the vault. He had a 300% cash on cash return in year 2. Is what it was telling. I don't know how it was calculating it, so I don't know how the vault does enforce stuff, but I looked at that. I'm like, that is nuts. That is nuts. That is about as efficient as you could get. And so anyone who's looking at illustrations, one thing I'd offer for anyone is if you're working the system and you're doing the things we teach you with whatever carrier, the way that your policy is designed by someone on our team, it can work as efficiently or more efficiently than shown. Right? So it's all going to be a matter of what you actually did once you're approved with banking. And Corey has just crushed it. So Corey, keep doing that.
Yep.
Yeah, here's what I would say to Corey's comment about not having found the ceiling yet. The quote they'll give you 1 month, that is the ceiling for that month. Do not cross over that.
Yeah.
But when a premium gets put into a contract, then the MEC limit gets recalculated. And so then the ceiling raises for the next month. So that's why you keep chasing numbers up.
Yep. All right. Christian has a question here. Says, so I have a One America as well policy. So if I have more than what my annual is, can I add more in PUA, or does my policy have to be set up for it? So what we're saying, Christian, you have to call them up and ask them to calculate that number. So we don't know because the MEC calculation is always being redone and it's a moving number. So just call them up and say, hey, how much can I put in this month? Or if it's an annual premium, how much can I put in for this annual premium with additional PUAs? You just got to ask. So yeah, but oftentimes can be more or quite a bit more than what your policy is designed for.
And do ask.
Yeah. Yeah, because some companies it's not very much. It's very limited. With One America, we're finding out it can sometimes, not always, of course, be more. And another question, same thing around that same concept. Shane's asking this, does Corey's question lead to why a higher 50-50 plan, so 50 PUA, 50 base, can be beneficial over time, compound your PUAs forever?
Yes.
Yes. That does allow you to put in more PUAs than the premiums built for. But it's not going to grow very fast in the early years, especially with a 50-50. It's going to have a lot more death benefit and not as much PUA growth, but you most likely have the ability to put in quite a bit more PUAs above the 50-50 premium.
Depends to give you real numbers, Shane. Like this is how I designed my 4th policy because I didn't need fast growth and I was thinking long term. So I wanted a warehouse that could really expand. And so I did a 50-50 of 20,000 a year, right? So my base is 10. That means I can put an additional $20,000 of PUA per year. So to Brian's point, if you're planning on putting that much in, you design it that way, it's almost like you're doing a 75-25 without the design, because you're getting that 50% to the base, and then you're adding 100% more, right? So now you've got 30 up here and 10 here. And so it will be way more efficient if you're adding the additional PUAs in. So you can either have that so you can add more in, or you can intentionally set it up that way with the intention of adding more. Does that make sense to everyone?
Yeah.
How I explain that?
It's always going to make the policy more efficient the more PUAs you can get into it in most cases because of the dividends and the compounding. But you've just got to be very aware of that MEC limit. If you overfund the PUAs, you can actually sometimes with some companies limit the amount of PUAs you can put in down the road too. So, and that's a lot of it's kind of that way.
Yeah, that's something put out there is that One America is the only one that really operates that way, where you just automatically have the right to go to 3 times base every year. Other companies, it has to be very specifically designed and set up for that, with like extra term and things to be sure that extra can be added if you think you're going to.
Yeah. Got to be very intentional with this. So that's why we always say when we design the policies, we want to be very intentional with how we design them, knowing there might be the opportunity to do more than what we've designed. That's like a bonus. It's like, oh my gosh, I can do more. It's like, it's, cherry on the top, so to speak. But as we said, we're always learning new things too about this stuff, and we're just sharing it right now. So yeah, I mean, Shane says, makes sense. Stuff on the policies, stuff it as much as you can. Cool. Turbocharge it. I think that's pretty much all the questions we got. We got about 5 minutes left. If anybody has any last minute questions, otherwise.
So there's a very important question in there from Brent Burdick. Why is Joe so quiet?
Oh yeah,
he was about to start talking.
I had a client ask me, they were rated and they wanted to know when they could get rated again. And my answer was, I believe it could be a year, but I don't know if it could be before the year for the next policy, or how does that work?
For a new policy, yes, you can get re-rated. But for the existing one, it has to be 12 months.
12 months to the date?
Yeah.
Okay. All right. Because
I'm not sure if it'd be 12 months from the date of, underwriting approval or the date of issue, because those are kind of two different things. Not sure which one they would go off of. Underwriting could tell you on that one. If you're looking at doing a second policy, a new policy that's less than a year from the first one, you're probably going to get the same rating unless you go out and do a new exam for that new policy. Because within those 12 months, you're able to use the same exam and labs as the first one. So that's something to have in mind.
I had someone tell me they got a different rating 8 months later, but they had to request the exam. I said, no, I don't want to use the old ones. I want to get a new one. They got a new exam somehow.
I'm surprised that the underwriter was willing to pay for it. Did they maybe go to their doctor and do their own?
I don't remember. It was like I didn't do it. Someone else did. Another agent did it, and it was again a few years ago. So I don't remember the exact details. See here. Corey says it's easy. Just call and ask for some. Yeah. So Corey's referring to One America. You just call them up and ask them. Pretty simple, and they'll tell you exactly right away. Rob has a question here. As far as becoming a Nelson Nash Institute certified practitioner, are you required to already be an insurance agent? Yes, and you have to be using infinite banking in your own life as well in most cases. They interview you, so it's a case-by-case basis, but they're going to interview you and ask you certain questions and all that kind of stuff. So you have to be accepted to the program.
I was talking to someone yesterday who's been in insurance for a while and is just recently found out about this. And you guys know how that feels. Like this guy was like coming through the screen. He was so excited. He's like, I've been a financial advisor for 20 plus years and insurance for 11. Why did I know about this? And so he was asking me, what's the best way to get started? I said, A, you got to do it. Like put it in your personal life and execute and start practicing it. And then B, become a Nelson Nash certified, practitioner, because it'll take you to the next level of going into the depth, like as deep as you can go. And then if you are newer, they're going to assign someone to mentor you right before they kind of give you that license. So,
yeah. So this question came in, I'm not sure why, from the Money Multiplier. Question: why did MTV shut down? Why?
Yeah, because I love MTV. I want to know why they shut it down.
When did it shut down?
We needed questions, and now there's more questions, so we can skip mine.
Okay.
I know it has absolutely nothing to do with what we're talking about. It's a pattern.
Well, it got me thinking. I haven't watched MTV since the 90s, so like
that was just said the same thing since the 90s.
It died in the 90s. Still there, take a look.
I tried to explain it to Connor what it was, like why it was cool. Like remember Dire Straits, Money for Nothing.
Dude, Dire Straits. Oh my. All right. Well, we have YouTube now, so carry on.
There we go. All right, one last question. So this is coming from Mav, the pilot. I just found this channel today. Awesome, welcome. and watched a few videos. I was wondering if you recommend using funds from a HELOC to do a dump in, and if you have any videos on how to use a HELOC to start your own bank.
Been doing it for 6 years.
Yeah, there's lots of videos.
Yeah.
Joe, do you know where those videos are on my YouTube channel?
I know that if you plug in Joe HELOC, 2 of them pop up.
Yeah,
go to,
type in
YouTube,
HELOC.
type in the Chris Noggle, and type Joe HELOC, and they'll pop up. Or just type in HELOC, and they'll all pop up.
Yeah, there's about Joe and I've done a couple. I know that a lot of people watch too as well. So we get a lot of there's
Take
quite a
Back
few out there.
Controls. Yeah, there's all sorts of them.
Yep. So this guy could search there. That's funny. Dire Straits sounds great.
Yes, it does.
So awesome.
All right. Rob says, last one. So I need to quit my current job and become an insurance agent like you, your broke ass brother-in-law, before I could be an IBC practitioner. No, I've never sold anything other than sold. I've never talked about anything other than infinite banking. No, you don't have to be a regular life insurance person at all. Most of us, I don't think any of us have actually done regular insurance. We've all done infinite banking.
This is it.
So most of us all used it first. We've all had policies first, then became agents.
Yeah.
So that's the difference right there. Yeah.
Yeah, it's just a life insurance license you got to get from your home state. Fairly simple, but it does take a little bit of studying in order to pass the test and then get the license. But you can do all that while you're fully employed.
Oh my gosh.
Chris, you got to remake that for
Had to do it.
MSTV.
Had to do it. We'll take us out with that.
Remake it with
part that's coming
MSTV.
Yeah.
Remake that with
MSTV, that's a good
MSTV.
idea.
Yeah, MSTV. Oh my God, remake Dire Straits. Someone who knows how to use Chat GPT. That's the task. Dire Straits, Money for Nothing, but remade with I want my MSTV.
See that? Look at that.
Perfect.
So let's see if you guys can pull that off. All right. Well, with that being said, thanks everybody for joining us for another episode of Ask Me Anything Happy Hour. Vivi's rolling in with her new pictures, and we'll see everybody on the next one. Thank you for joining us.
Thank you.
Take care, all.
Bye, everybody.
Bye-bye.
Bye-bye.